this downturn, there is a cyclical element to it. My sense is, the digital ad companies, especially, I think Alphabet is in a strong position still. The revenue base is diversified, and they have to fix the cloud profitability, which I think they're trying to do here. Meta, nobody knows what the outlook is going to be going forward, for just the way it was growing before. Can it keep growing? I don't think so because they're losing, impressions and time spent on their platform.
Welcome. So we switched over back to YouTube. Yeah, I mean, I don't know what's going on. The streams were completely fine on TradingView before we got banned, and yeah, I have no clue as to why things have just turned so laggy. So, let me know if it's much better here. By the looks of it, it does seem like it's much better here on YouTube. So, yeah, let me know in the comments if it's okay, if it's better than what it was on TradingView. If it is, then fantastic. Yeah, we'll just bring it back to YouTube. We'll see if we can get something sorted for TradingView. But yeah, no, I'm just done with the lagginess. But yeah, okay. So we got out of that waves trade. Just finding support at the structure here. So yeah, it's we're very much ranging, so we got to be careful as well when things are kind of in this sort of structure, because some of these altcoins really do decide to pump up. Um, so yeah, it's one of them. Let me get rid of this. Okay. So yeah, hopefully the quality is much better. Da, 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 da. Yeah, here goes Bitcoin. Um, Let me have a little look at what's happening on our other trades. So no need for that. All right. So a nice pullback. I mean, we closed our US dollar Swiss franc trade. Literally just pulled back beneath our take profit. So we lost a little bit as it decided to start turning around before that. But profit is profit. We cashed in. So yeah, it's been successful on that end of things. Now we just got copper tweeting around that break even point. But yeah, hopefully we really start to ramp it down. It's got a lot of potential to come down. We just kind of want to break through this natural trend line that we've got. So ideally, yeah, we just want to break that trend line's coming from the higher time frame. It's kind of obviously pushed past it, so I can tweet it a little bit better. Those that are joining us, welcome. Yeah, we sacked off the TradingView. It's too laggy, and it works completely fine here. So we'll try and sort something out. But if not, we'll just continue having it on here. So yeah, seen a nice push up in prices here on crypto. Let's have a little look at if we can get anything else. And I don't know why. Bu- 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 Solana looks alright. And she pushed right up.
policy preferences, you're going to need copious quantities of raw materials, mine and otherwise, to make the future happen, whether you're on the left, right, or center. And those things are still undervalued in the marketplace today. Look, energy, materials, throw in some industrials, and you had basically half of the equity market.
Looks like we might get in on this for that breakout.
Like 10 to 15% of equities, and we think that there's some mean reversion from a structural point of view higher that has to happen. You have to recapitalize those sectors.
Right, we're going to go in long on Solana, see whether we can make that break. Going to have a relatively tight stop, okay, just beneath here, and just play it to the very top. See what we can get. Let me change this.
That's what we're focused on this year. That will allow EM to possibly outperform developed markets.
A conversation you do not want to miss coming up next with Robert Koenigsberger of Gramercy Funds.
Right, we're going for that break. Okay, so we'll see what we can get. I'm just going to pull back a little bit. See if we can hold. So we can get that accumulation now. See if we can make that push. Alright. Could be the case that we actually come down, yeah. If so, then we get a nicer entry for that rebound. But let's see. Alright, here we go.
Emerging markets.
Long emerging markets.
The US is not the only market in the world. We're in the start of dollar downtrend.
The emerging markets benefit from the weaker dollar.
China is quite pivotal.
Emerging markets assets are cheap, right? They had a very bad year last year.
There are some juicy yields to be had.
And they offer carry.
There's a great confidence around the outlook now.
You kind of can't fight that carry.
Sovereign bond sales seeing the best start in a decade. A weaker dollar, China's reopening, fueling demand as borrowers welcome the lower costs. Gramercy Fund's calling for significant upside in the next 12 to 24 months. The firm remaining constructive in its Q1 outlook, expecting the destination to be worth the volatility. I'm very pleased to say that joining us now is Gramercy's Robert Koenigsberger. Robert, great to catch up with you, sir. It's been a while. A lot of people are outside of this trade wondering if they should chase it. You're in it already and have been riding this wave for a long time. So let's start there. You've got a different decision to make. Do you stay in it? If you choose to trim some of the winners, how do you redeploy that capital?
That's right. Good morning, and thanks for having me again today. So look, I think there's a tension between FOMO, fear of missing out, and also climbing the wall of worry. And, I think we got to go back and look historically at the dislocations that we've seen in emerging markets and see some of the returns that have come out of those. And, over the last 25 years, we've had like 11 of them. The peak to trough is down like 20%. The recovery takes about 8 months, and it's typically been like 27%. And then 12 to 24 months over that, after that.
Right, ideally we want to hold this area here.
So from a historical perspective, I think it's hard
Come down, bam.
here. Now,
Push right back up.
in our top down this year is volatility, and we expect there'll be volatility due to liquidity, due to policy uncertainty, due to supply and what have you. So that's where Jonathan, we talked in the past about having the ability to be tactical and to be able to move around, not only from a top down perspective but from a bottoms up perspective.
Can we factor in China as well, Robert, just to jump in? Because China's reopening story has poured gasoline on all of this as well. Can you tell me about how you think the characteristics of China's reopening might be different to what we experienced in the West and what that tells you about where you want to be off the back of this?
Sure. I mean, I think, and I think we talked about China in the past. A lot of the focus was around the property sector. And the property sector, I mentioned it because it's like 25% of the GDP. And I think a lot of the concerns around China and what they may or may not do in 23 were perhaps alleviated a bit
Can even put that stop right there.
when I think they acquiesced, they blinked the support program that's
All right, so
the economy.
yeah, you can either set your stop loss much tighter just beneath the structure here at 21.22, 21.21 if you want, or you can place it all the way down here beneath this, give it a little bit more room, still have chance. If we stay within here to make that push, we are going for this stop loss, nice and tight one here, and we're playing it just at the top of this structure here, so 22.2 as your target. So yeah, let's see where we can go with this.
Yeah, that's a great question. So it's a perfect example, Jonathan, of being able to be dynamic. So for us, we picked about 4 different baskets of Chinese property developers. The first one you mentioned, you can take something like Country Garden. It was trading around 7 or 8 cents. It is trading around 70. The asymmetry has gone the other direction.
This looks like it's found a bit of resistance that we should see a switch up. I mean, still ranging, come back down, seeing a nicer pullback here. So let's hope we can continue with this.
That's the opportunity to be dynamic, to move from the 70-cent security down to the 13-cent security.
You said they blinked. Can we just build on that? Because it's only a year or so ago people said China was uninvestable. Why do you think they've blinked? Why are you so convinced that this is a policy shift that is sustainable?
Yeah, and I'm not going to say that broadly about Chinese investing, and I agree with your previous guest that you don't always have to get exposure to China to the local market. But when I say they blinked, we have to go back to the Evergrande crisis. If you remember, everyone was worried that Evergrande was the Lehman of China. And what isolate Evergrande and then insulate the rest of the sector. But the entire sector was trading at 5-10 cents. The sector was frozen. This is 25% plus of the GDP. So when I blink, I talk about, the massive amount of support, and one could even argue was the equivalent of a Chinese TARP program in order to support this sector.
Robert, what was impressive about you guys last year is what you chose not to be invested in. You went into the year without Russia, without exposure to that story. It wasn't like you had to race to cut exposure. You did it ahead of time. Can you tell me whether that was your best decision, what not to own, as opposed to what to own?
Look, and I think that takes you to the whole debate about, passive versus active management. And, I think over the past, 5-10 years, passive and beta has been easier to hold on to. But your example of Russia and Ukraine is a great example. I think it exposed people to losses, I think maybe 800 basis points of loss, just because it was in the index. And one of the problems of when something's in the index, it's risky not to own it, right? I hear managers say all the time, well, we have no risk because we're flat to the index. It reminds me when we started Gramercy back in the late 90s, and the JP Morgan Emerging Market Bond Index had an 18% weighting to Argentina. It wasn't, whether you owned it or didn't own it was a huge thing. So yeah, I think 2022 is a big part about...
This was a nice hold, so we'll see whether we can continue holding that structure.
Paradigm of non-payment in high yield, sovereign high yield. Robert, where do you think that's going to show up this year?
Yeah, Mohammed and I and the team in 2020, as we huddled up around COVID and all the implications, one of the themes that we identified was this notion of paradigm of non-payment, and that there would be certain sovereigns that would have adverse effects because of COVID, and we've seen this great balance sheet transfer, resource transfer from sovereign balance sheets to corporate balance sheets. And we thought that would play out, quite frankly, earlier, 20 and 21, and it did to a bit in Argentina and Ecuador and what have you. But remember, there was a tremendous amount of global liquidity in 2021 as well. So what we saw in 2022 is...
Come on, give me that push.
...starting to play out. Places like Sri Lanka and Ghana and what have you. And these stressed sovereign balance sheets not having access to the capital markets. So that's created actual default, and securities have gone down and traded like default. So we believe 2023 could be the year where investing in the recovery of this paradigm of non-payment could be important.
This is fascinating stuff, deeply thoughtful. Enjoyed the outlook too. Robert, let's do this again soon. Robert Koenigsberger there.
Nice structure. Let's see if we can break through this high here. Let's go, let's go, let's go. By the way, guys, those that are joining us, that's the trade that we're taking. We haven't sent it out to premium, so yeah, just get involved. It's exclusive to this stream. So let's see if we can get that breakout. If we can get a breakout, should see a nice ramping up and pushing up quite nicely. So let's see, building up on some nice structure here. Held. Well, we do need to break out relatively soon. We need Bitcoin to help make that break. Alright, let's see if we can get that break.
Equities up just a little bit, much more so on the Nasdaq. Let's get you a trading diary. Coming up, existing home sales at the top of the hour. Fed Governor Chris Waller speaking at 1 p.m. Eastern.
Right, if you're in the stream, this is an exclusive. This is only for the people that are here on the stream. This is your stop loss here, 21.2. This is our entry here. This is your take profit at 22.2. Okay, 21.2 stop loss, 22.2 take profit. if you want to incrementally take your profits at, just set them up. There's one here, 2, 3, and then your last one be up here. Now you can either set it here or you can set it at the top, your final take profit. We're gonna go somewhere in between 22.2. If it starts kind of struggling at this first one, we'll just get out there. Right, let's see if I may as well just type it out. Can we break? That is the question. Right, we posted it into premium now. We kind of had enough time to do it, so we'll send it in there. Right, if we break trend line, it's not going to work out. Still looking good. Still looking very bullish.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
This is holding nicely as well.
It is 30 minutes into the U.S. trading day, Friday, January 20th. Here are the top market stories that we're following for you at this hour. Avoiding the 1970s, Larry Summers warned central banks not to go soft on inflation. We're going to get the read from Esther George, president of the Kansas City Fed, an exclusive exit interview. And tech braces for more pain. Google cuts 6% of its workforce as big tech is...
Does look good for a breakout. Almost got a little cup and handle forming. So let's see if we can really ramp it. So here's your cup and handle. Top. And there's your handle. We got breakout. So we should see a nice continuation back up after that. Again, I mean, it's on the 15-minute, so not expecting it to be long-lasting. But, I mean, the break has happened. It's looking good. So let's see where we can go with this. This is starting to make that push. Need to break through this high here. That's your high to look at.
Keep coming back to claims telling us that the labour market is strong. If you base everything from there, I think you've got a pretty good handle on what is happening.
Yeah, just for some superlatives for that. Existing home sales, they've hit the lowest since 2020.
Just thinking. Alright, what we're going to do is we're going to move our stop loss to break even at our entry is 21.39, yeah? So if it comes back into structure, we're out of break even, but it's close to the current. Okay, whatever. Just cut out. Yeah, we're break even now, so we're risk free. So we're just plain sailing from here. So if we get a nice break, which we're kind of starting to see here, then yeah, we're in the safe zone. If not, it's going to come back into structure, and we'll just get out there. Potentially see what it's kind of looking at if it comes down to this level and holds. If it continues to hold, then we could get a breakout somewhere around this region down here. But yeah, it's not looking too bad here.
looking at pretty much the whole bond market is on offer. You have 10-year yields up by about 6 basis points. We want to send it over here now to Bloomberg and Kansas City Fed President Esther George, an exclusive exit interview as we look on inflation.
Yes. Get in. Let's go. Let's see how it reacts, if we can get continuation, but it's looking good, yeah. Okay.
To Kansas City, where Esther George is joining me. She's the president for a few more days of the Kansas City Fed, and as we mentioned,
What's happening over here? Yeah, we're seeing a nice push.
thank you for having us. I'd like to start with the data we just got and data we saw earlier this week. In the existing home sales are falling. Finally, prices fell for existing home sales and for the median price. But we saw retail sales come in weak. We saw the ISMs come in weak. Is the economy unfolding as you thought it would?
Well, welcome, Mike, to Kansas City. Yes, I think the economy is responding to some of the forecast and some of the work that the Federal Reserve is doing to try to bring better balance between supply and demand. And of course,
All right, let's see if it can hold here. If it can't hold this level, then we'll see. But again, guys, I mean, we're risk-free now, so it's plain sailing. If worst comes to worst, we get our break even. Best case scenario, I mean, we get a nice, very, very nice move.
PCE price measures because it's lagged. Why don't you just sort of ignore the idea of the core rate? Because everybody comes out and says inflation's too high. You look at the core rate, but you know that's influenced by housing, and if you take that out, seems inflation's coming down faster than you thought.
I think it's encouraging to see because we've seen this in the goods sector.
Also, let's clone this. Alright, so we needed this next break to happen. Still got this kind of trap zone here, so we do need that break. It's not a fully completed break yet. A move up to 21.6 be looking like more of a confirmation of kind of it just wants to absolutely fly. At the moment, just setting some structure in between this level. Could be the case that we get a little bit of a pullback, continuation, continue along here, and then make that break. Yeah, the dollar's coming down nicely. Very, very nicely. It's going to find some support here. So ideally we need it to really make that push. This needs to go. How long have we got? Not long. Could get it soon.
It's one of the things we have to be very mindful of. So there are lags with this policy instrument. It transmits pretty quickly to financial conditions, and of course we've seen that. But we also know that there's lags, so it's in the pipeline coming. It's one of the reasons that last month I supported that downshift to a 50 basis point increase, because I think it will be important to begin to watch very carefully what signs are we seeing in the data, but also listening to our contacts in the region and understanding, are we beginning to see the kind of progress we need to see.
Well, you had a reputation as an uber hawk, somebody who was always very on top of inflation, and yet you were the first one to warn about the lags and the fact that the Fed had to be careful. Was that because of something you were hearing from your constituents out here?
Well, in this most current tightening cycle, I think we were beginning to approach this.
Alright, this is the level that we want to hold now. Nice reaction from buyers. See if we can hold. In all fairness, I mean, having that stop loss at break even is where it wants to be. If it comes down to that point, I mean, it's more than likely to turn around. So, yeah, we wouldn't move the stop loss into profit just yet. It's just still within that range. This is kind of where you want it.
So it is. This is a very tight labor market, and I think unusually so in this sense. We've seen 3.5% unemployment before, but when we look at the people that are engaging in that workforce, we are still down in terms of participation compared to where we were in 2019. We see a number of job openings for every available worker. And so in that sense, all the indicators show how tight the labor market is. And again, when I go out and talk to people, it's their number one concern.
This is where it's going to start potentially holding. I mean, come right to the top of that range. So a nice move. So
Making it more complicated, if you will, to see inflation come down in a very convincing manner.
Raise unemployment by a full percentage point, and it's about 1.5 million people who lose their jobs. Do you think there's a path to avoid that now? Do you think that maybe this is a different enough dynamic that unemployment doesn't have to rise significantly?
I think when you look so far, so spending is
all right.
what I'd really be looking for is to see, are some of those job openings going to come down? Will we see some of those vacancies removed as we see this imbalance begin to be addressed? So I think this scenario, can there be a soft landing, is one we would all want to see, and there are some possibilities for that. There's still a lot of money sitting
All right, close that trade. It's not happening.
accounts of households. They may hang on to
Close. All right, we're out. I would take 40% off that. That's fine.
Why do you think Wall Street doesn't believe you when you say you're going to hold rates for a long period and you're going to do whatever's necessary?
I don't know that I'm the right person to speak on behalf of Wall Street. I will tell you, we can have different horizons.
See whether they can reaccumulate. But that's a switch. That's a fail.
Recession probabilities, a lot of focus on what's going to be that peak rate. I think for me and my colleagues, the focus is really on
See if we can get something else on the cards.
and that is really a very singular focus right now, and thinking about what it takes to have that policy be sufficiently restrictive, not overly restrictive, to get to that point of a 2% long-run inflation goal.
Well, let's stipulate you do that. What do we see in the economy once this cycle is over? Do we go back to the new normal of low rates and low inflation? Do we go to an old normal? Do we go to a new normal? What kind of economy do you expect?
I think it'll be different. I don't have that crystal ball to really see what will it be. But one of the things I think has been extraordinary to watch during this time, you had a lot of demand come in. So the support from fiscal stimulus, from monetary policy produced a lot of demand. And yet we are looking at still pretty low growth. And we're looking at binding constraints on supply, and in particular,
This looks alright.
at the labor market.
Potential break.
And I think there, one of the things that will be interesting to watch unfold, I hope research continues to look at this, is we were focused for the last 2 decades really on, is it a demand deficiency in our economy? I think this time we've seen
Seen some nice buy side.
on the supply side. And what structural the nature of those might be, I think is going to be worth keeping an eye on. And I think longer term, we'll
Why does it not load?
monetary policy's role.
How has the structure of your district's economy changed in your time at the Fed, and how does that affect monetary policy?
Well, so many things have changed over my time at the Fed.
This is at breaking point as well.
Focused on ag and energy.
And this could go.
A lot of consolidation. Farms are bigger. The way they go about doing their work is different. Technology has played a different role. We see transportation and logistics in this part of the country. Very important factors in how we understand what's going on in the region. So I suspect many of those trends are going to continue, and as those structures in the economy change, of course, the Federal Reserve, as it carries out its mission, has to be mindful of that. And we're well positioned to do that, both by boots on the ground, as we talk to people, as well as the team of people that do our research and think about what's going on.
When you look at the world of politics, you see complaints from places in the South and the Midwest that policymaking is decided on the coasts. And I'm wondering if there's any kind of feeling that the Kansas City doesn't get represented, not by you, not well, but doesn't the feelings of people here aren't as reflected in monetary policy on Wall Street, in economic policy, as other parts of the country.
So it is true. You have an economy that has different
Another okay setup as well.
coast where urban areas versus rural. One of the things that I think is so important about the design of the Federal Reserve is that it does give line of sight to the policy deliberations for people in the 10th Federal Reserve.
ADA looks alright if it's able to hold this level here. That's probably your best entry point. It comes down, holds, and then pushes back up. That's the best level.
The kind of surgical instruments that let us affect those, but I think being very open to understand that the different regions experience the economy differently. People experience
Screen resolution is not that great. What can I do? I don't know. Bear with me. Let me see if I can do anything on settings.
so important to how that unfolds.
You hear a lot from people on Wall Street. This Fed always gets things wrong. You've been with the Fed for a very long
No try replay.
president of the Kansas City Fed. What do you think the biggest mistake in policy?
It's 480. Okay. Bear with me.
Decades that you've been here.
Well, I'm sure people could point to a number of things. I think for me, Mike, when I look at the long-run focus of this institution, our mandate is one of long-run decision-making, of deliberation
Stream
around
settings.
that, of ensuring
Enable auto.
stability in the economy. And I think those are hard many times as the economy is shifting, as you see different business cycles come through, to get timed exactly right. One of the things I think, though, that the Federal Reserve is very committed to is learning from those experiences and learning what happened in that. We've done that.
Cheerio. How's the resolution on your screen, mate?
When financial stability
Because, I mean, I'm checking the stream settings. I can't change the stream settings. It just goes off the connection. It says it's excellent connection. You can't get better connection than that. So, I'm just wondering whether it's on my side or not. So, please let me know if the quality on your screen, Cheerio, is alright. Can you see the numbers? How clear is it? Yeah.
Best in terms of diversity in the Federal Reserve System. Is that a conscious effort? Is that because...
Where is it? Matic.
I think it's a conscious effort. It's a conscious effort because, again, my own experiences are the breadth of diversity that you bring to problem solving is so important. And that happens around the FOMC table.
But yeah, Ismail, I'm not sure what I can do. I'm on settings. It's not, I can see them because I look at them on a larger monitor, but resolution is bad. Okay, alright, so it is a problem on my end. Okay, pop out, see,
And I've always thought that was important, and I think it will continue to be important for this institution.
You mentioned the Jackson Hole Conference. This is Davos week, and the Davos Conference has changed tremendously over the years as TV has come in and has become a bigger and bigger thing.
For some reason, it won't let me do 1080p. The settings, literally the highest I can do is 480. I can have it on automatic. Obviously, it fluctuates, but yeah, 480p is the highest that I can do in terms of quality on the stream. I don't know why I can't increase it anymore. I'll have a little look as to...
It's focused on central bank issues where we bring academics, we bring policymakers from around the world to talk about those issues. So a commitment to being transparent has always been there. That's served us well. It informs the public about what goes on at the conference. During the pandemic, of course, when we couldn't gather in person, we began to find
Maybe
ways to do
if
it
I
better
do
than we did.
this, maybe.
Opportunity to do that. So we'll keep that commitment to transparency, I suspect, for Jackson Holes to come.
Esther George, thank you much. One 5-second question here. Chiefs or Jaguars?
Well, I'm in Kansas City. We think it's going to be a great lineup, and I'm rooting for the Chiefs.
Esther George, thank you very much. Her final interview as president of the Kansas City Federal Reserve. We'll send it back to you.
See if I can do it.
Thank you very much indeed, Mike McKee, Kansas City Fed President Esther George with Bloomberg's Mike McKee. We wish her well and thank her for her service. Coming up, big tech, big cuts. Google.
If we get in a trade, just the E entry price and stop loss. Okay. Got you.
This is Bloomberg.
I got you. Okay. Yeah. If we enter, I'll just shout out the numbers. But yeah, I'll have a look again at how I can get it to 1080. At the moment, it literally gives me 480, and that's it. Yeah. Well, this is a head and shoulders here. So this would have been kind of an inverse there, but this is a head and shoulders. So, I mean, the buy side volume really died down here. So it's not looking fantastic. It's, yeah. It's a nice ramping up, but just, I'm not seeing, I like to see volume to really support the move. Now we're getting a move. Alright, is Solana gonna go for it? That's the question. Solana is looking like it's potentially the best option. What's ADA doing as well? Alright, we're going to go long on ADA. We're just going to place stop loss at 0.34. Let me have a little look as well. Just come right back down. So it came in. I mean, that would have been a nice entry if we just kept an eye on it. Alright, alright, let's see if we can hold. Ooh, what was that? That's alright, wasn't it? See if we can hold. I like a Solana as well. Solana is still holding that point now again. So see if we can hold. Solana can continue holding this point. It's the structure is looking nice. Could get a very nice break. Just need Bitcoin to hold its structure too. Ideally hold this level here, but I mean it's looking right. It's gonna come a little bit deeper.
I wonder if it's a question actually the management is asking themselves, right? Because ultimately their growth is set to slow, and you've seen the share price come down massively. Obviously rates and, you know, tech stocks just generally being a bit less appealing on that basis. But they're sort of trying perhaps to show investors that they can increase profitability without needing to grow the top line. So if that is, you know, the thought process here, it would suggest that maybe there is a slight pivot away from that growth trajectory. The other way of looking at it is that, you know, to be maybe cynical, you could say, well, maybe
we need to hold this point as well.
to cut some of the chaff so that when things start to perk up again, which they may well do, they're in a far better situation than they might otherwise have been.
If I just look at Class A shares here for Alphabet, we're looking at an estimated PE about 20 times. Is 20 times enough to justify a growth stock that may no longer be a growth stock?
Well, I think 20 times is in line broadly with the rest, with the market as a whole. I think I'm right in saying. You know, is it to then say that actually a lot of the sizable stocks in the market are growth stocks? Like, I don't know, this might be a question more for an equity strategist than for me. It is like clearly discount platform at a premium to Facebook. Is Facebook a growth stock? Well, it's not really growing much at the moment, but it may well do in a good few years' time if it gets the metaverse right.
Looks like we're coming down. Oh.
I don't think anybody quite knows the answer to yet is, are these changes permanent?
And actually things are working. The ad model looks like it's actually going to be delivering. Has Netflix come through the hole and is now on its way out again?
Well, actually, to this question, if we almost take it back to this question about growth stocks, it's like one of the things.
Why does it not load?
There's sort of an assumption. I'm massively oversimplifying, but there's an assumption that at a certain point you can flip the switch and just generate cash flow when you need to, right? And that is the question.
Looks like we might get a reversal, to be honest.
Because one of the things that is driving subscriber growth is investing in content, right? You need new content not just to attract new subscribers, but to retain the existing ones. So there's always going to be a relatively high level of cash spend. The actual profitability missed some of the estimates, even though the user growth was high.
And this is interesting as well. I mean, Ocean could literally, if we start pulling down heavy, this could really ramp up.
The people who have been signing up to the ad-supported tier, they are not cannibalizing the existing high-level subscribers. Now, time will tell whether that's actually the case. The other crucial point is they might have been.
Alright, Solana has rejected that, so yeah, you could even look at potential short there.
Real quick, how much can they actively make per user to justify the kind of spend? You mentioned hopefully 15. Do they get to 20, 25?
So Hulu does $7 a month in advertising revenue from each of its subscribers. I think, you know, if you can get that to 13, then you'd be looking at $20 a month.
Right, we're going to get out of this ADA trade. It's at break even, so yeah, we're going to just let it do its thing. So yeah, we're out of this. We'll just let it do its thing. Looking at it finding resistance and pushing back down. This is making that nice push. Very nice push. Can it go? Can it go? The only thing that I don't like with this is this candle right here. That candle there. Bullish candle. Look at that. Perfect to that. 100. Straight back down. Could very well be a fail. Straight back down. That's looking bearish. Okay. 382. Where was...
We have about an hour into the U.S. trading session. We're looking at, another rally underway here. NASDAQ 100 outperforming up by about 1%. Kelly Lyons tracking those moves for us. Kelly. Yeah, Alex, we're trying to end the week on a positive note, but unless something remarkable happens, this likely is still going to be a down week for U.S. stocks because we're coming off of a 3-day losing streak on the S&P 500. So a 0.6% move higher today isn't enough to unwind the damage we have already seen over the course of this week. And as you said, the NASDAQ 100 is outperforming up more than 1%. Interesting to see that happening as we have bond yields moving higher. The 10-year Treasury yield up about 6 basis points to 345, but likely it's really more about the individual stories today than that broader macro cross-asset picture, like Netflix up 7% after blowing it out of the water on subscriber additions in the quarter. They reported last night 7.7 million compared to an estimate of just
Quite bullish structure as well.
taking that news quite well. Also, technically bad news that is being taken well by the market is job cut announcements we have gotten today. Wayfair, the online home retailer, cutting 10% of its workforce, but getting a really nice reward in the market for that. That stock is up more than 15%. Investors clearly liking those cost-cutting efforts. And that effort is at Alphabet as well. It announcing it's going to cut 6% of its workforce, about 12,000 people. That stock is up 5%, and the CEO, Sundar Pichai, basically saying, I take full responsibility. We overhired. They're now facing a very different economic environment.
Literally came right down to break even.
On the subject of that economic environment, let's talk about the economic data we've gotten today as well in the form of existing home sales.
This is looking like it could go.
Surprised in that they weren't down as much as expected, but still declining for an 11-month in a row and actually hitting the lowest level since 2010. Of course, the housing market, one area of the economy in which you are seeing the deterioration showing up. Still not really showing up in a material way in the labor market, though, and does it have to for the Federal Reserve? It raises the question of where Fed policy goes from here. We have seen a chorus of Fed speakers talking up the idea that they're going to do smaller hikes, like 25 basis points next month. That is something Patrick Harker echoed, saying that the days of the Fed hiking 75 basis points are over, but still he expects they will raise rates a few more times this year. So now the question becomes, Guy, is it so much about the journey anymore, or is it about the destination and how long we stay there? That is what this market is contending with.
Yeah, and the market is basically based the whole idea on the idea that we are going to see a decent-sized recession. The yield curve has pointed to that, but now maybe we don't get it because the labour market is holding up. Soft landing. Esther George talking about that possibility. Kelly, thank you very much indeed. Let's turn to our question of the day. Where does that leave us? Are the highs in for the year? Joining us now, Ethan Devitt, Monitor's Chief Investment Officer. Ethan, I was looking through the...
Yeah, alright, I don't like that. I don't like the structure anymore. It's not looking appealing to me. This has come down. Dollar index has come down nicely now. Finding some support. So again, probably looks like we're going to range, which just isn't nice at all. It really isn't. Solana's still holding, so Solana is probably your best option, right? And in terms of if we get a much deeper sort of pullback in the market, Ocean is looking good. maybe potentially. This candle here is bullish, so I mean it could very well pump up as well. So, but if things really start to break down, we could lose this 200. This looks nice. I do like it.
Upgrading to kind of chase the rally that we've seen. Like, then how does earnings wind up factoring into something like this?
It's really interesting. One of the messages I definitely saw loud and clear last year was the telegraphing of bad news well in advance. So that's why we're not seeing those kind of negative earnings surprises that we thought we would.
Yeah, we'll see. Could very well break and push up high.
Is actually quite good in terms of energy demand and energy pricing. That's probably a surprise that nobody saw coming. So when that surprise is better than as expected, it is time to go back to the drawing board on those models and perhaps revise the numbers up.
Alright, yeah. We're not getting anything. It had its opportunity to really smash through. Okay. Yeah. Thank you for joining me today. Yeah, I'll try and solve the quality on our streams out, so that at least we can go live on TradingView as well as YouTube. Okay. So yeah, thank you for joining me. And yeah, unfortunately, I mean, we caught that waves trade. Got a little bit of profit out of this European close. New York opening session. Yeah, so we'll see what we can get throughout the day. We'll keep our eyes open on trades and the price action. But yeah, it's just, yeah, I mean, the dollar's made its move. It's probably going to hold it for a little bit and then come back down. So this is going to start slowing down, potentially pull back. So we'll see how things kind of react when they're at this level. See whether they're going to ramp back up. Solana traders is holding. Prices are holding quite nicely. So it just depends on whether it can really go. I mean, yeah. Alright, well, yeah, thank you. We'll see you later on. We'll come on for the New York close tonight. Should get some nice price action to end the week. Okay, so we'll try again. But we're just going to let it do its thing now. I mean, volume's died off here as well. So, yeah. This is the one that you want to keep your eye on in case it does break. Because if it does ramp back up and it breaks, it's going to break out very nicely. Take profit 2.2. Yeah, you are seeing some nice signs. In all fairness, you know what? Yeah, keep an eye, see what happens. You might be able to get a breakout. Yeah, we'll keep an eye on it. If things look good, we'll see. We're going to be taking a call for 2 hours now, so yeah, if you guys can, well, if you can keep an eye on it for yourself, that'll be great. We'll have it on the screen, but again, we are in a meeting. But yeah, thank you very much, and we'll catch you later on. Cheers.